Yo, what's going on, guys? Welcome back to the channel. If this is your first time here, my name is Vince and I post on this channel every single week talking about options trading, teaching you guys some option trading strategies, talking about the basics of options, and showing you some of the option trades that I take personally. So if you want to stay tuned with some of the videos, you want to learn a little bit more about options, then make sure to go ahead and subscribe to the channel. So pretty commonly in my Discord chat, as well as in the comment section down below, I'm seeing the question pop up of what's the difference between a cash account and a margin account, specifically when trading options. There's gonna be some pros and there's gonna be some cons of each account and some key differences that I wanna go ahead and go over in this video. Hopefully after this video, you'll learn a little bit about the differences, and depending on your objective and your trading style, you'll be able to choose which account is better for you. And the title is not clickbait. With one of these accounts, you can truly avoid the pattern day trading rule. So hopefully after watching the video, you can go ahead and take advantage of that. Now, before we jump into the video, make sure to go down and join the 10,000 subscriber giveaway. It's gonna be the second link in the description below. I'm giving away two 29-inch LG ultra-wide monitors and a Respawn gaming chair, hopefully setting you guys up with a really nice trading station. Make sure to go ahead and subscribe to the channel, smash the like button on this video, and please excuse the temporary intro you're about to see. I'm currently working on a really cool one, so this is just for the time being. All right, guys, so let's go ahead and jump right into this. The number one difference between a cash account and a margin account is the settlement period of your positions. So let's take, for example, a $5,000 portfolio. Let's say today you open up a SPY call worth about $1,000 in premium. Now, if you day trade that, let's say you close that position for a 20% gain, you made $200. Now, after you close that position, that $1,000 that you just used to take that trade can no longer be traded for the remainder of the day, meaning that you have only $4,000 left throughout the rest of the day to trade the remaining options that you want to take. So you had $5,000, you used $1,000 on the trade you just took. Now you're left with $4,000 because you have to wait for that cash to settle, which takes 1 day with options. Now, with a margin account, if you were to take that same trade, that $1,000 would be instantly settled back into your account, and you could use the full $5,000 in your portfolio for the remainder of the day. So in that department, I would definitely give a +1 to the margin account there. That is definitely a pro of the margin account. That money that you just used in that trade will be instantly settled into your account that you can use again. Now, there are some negatives of a margin account that we're about to get into, which makes that positive look a little less sweet. So let's take, for example, that $5,000 account. Now, if you had a cash account, you have $4,000 left to trade throughout the day. If you had the margin account, you have that full cash settled, the $5,000 left to trade throughout the day. Now, here's where the negative comes in for the margin account. You just went ahead and used one of your 3 day trades that you can use in a 5-day period. So with only 2 remaining day trades over the next 5 days, you're really restricted on what positions you can take. And if you hit that 4th day trade, your account can be restricted for up to 90 days. I see this happen way too often where traders will take a new position without any remaining day trades, which locks them into that position. You're really at the mercy of the stock at that point. If it goes up, if it goes down, there's nothing you can do about it until the next day, unless you want to go ahead and take that restriction. Now, with a cash account, there are no pattern day trading rules. As long as you're using the remaining balance in your portfolio, you can take as many day trades as you please. So you have $4,000 left in that cash account. You can take 4 more trades worth $1,000. You can take 8 more trades worth $500 each. So this is where the cash account really stands out to some newer traders or some traders with under $25,000 in their account. If you have a margin account and you're over $25,000, then you don't need to worry about the PDT. But if you're under, like most people that trade options, some newer traders trying to limit their risk, have smaller accounts, then using a cash account, being able to use their full balance every day without any day trade restrictions can really stand out and can really be the way to go. Now, this is why I recently moved my money out of my margin account into a cash account, because I've started to be more active scalping options, day trading options, and I didn't want to be restricted to only being able to do it 3 times a week. So I'm sure the question will pop up is, can I do this on Robinhood? Can I open up a cash account on Robinhood? Can I day trade options as much as I want on Robinhood? Now, the answer to that is unfortunately you cannot. Robinhood, right when you start to trade options, will automatically upgrade your account to a Robinhood Gold, which is basically a margin account on Robinhood. Now, I don't know why they do this. I think it's to protect themselves or to make money off of you from using margin, but unfortunately, you cannot have a cash account and trade options on Robinhood. Any other broker, E-Trade, Thinkorswim, TD Ameritrade, you can do this. You can trade options on a cash account, but unfortunately with Robinhood, you cannot. Now, like the PDT restriction on a margin account, there are some restrictions on a cash account. That's called a good faith violation. Now, a good faith violation is when you use unsettled cash in your cash account to open up a position and close it on unsettled funds. So just make sure to keep an eye out for that. Look up good faith violation on Google. It's very obvious. Just look it up. Easy definition. Make sure you're trading with only settled funds in a cash account. The penalties are very similar to a PDT. They'll start to restrict your account. If you do it multiple times, they'll permanently ban your account. So I hope that wraps up the whole cash settlement period between a cash account and a margin account. Basically, with a cash account, you can trade your entire balance every day, as many day trades as you want, as long as you're only trading your settled funds, and it'll all be ready for you the next day, as it only takes 1 day to settle. With stocks, it takes 2 days to settle, but with options, it's only 1. With a margin account, that settlement is right away, it's instant, but you're restricted with the PDT rule. Now, the next thing that I want to go over is the type of options that you can trade on a cash account versus a margin account. On a margin account, you can sell spreads, you can sell premium. With a cash account, unfortunately, you cannot take advantage of those data gang type strategies. So like I said, with a margin account, you can sell puts, you can sell calls, you can buy calls, you can buy puts, you can do every strategy, do butterflies, iron condors, spreads, everything you can think of can be done on a margin account. Now, with a cash account, you cannot take advantage of those sell side strategies. So you can buy calls, you can buy puts, and you can do covered calls. Now, the only reason you can do covered calls is because to open up a covered call, you have to have 100 shares of that stock, which is in your account, which is settled, so they'll allow you to open up those covered calls. So if you're an options trader looking to take advantage of spreads, looking to sell premium and make money consistently through theta gang strategies, unfortunately, you do need to have a margin account. You can't have a cash account for those strategies, but what you can do is you can have both. I have both. I have a cash account, I have a margin account. If I want to sell premium, if I want to open up spreads, I use the margin account. And if I want to day trade options and scalp options with unlimited day trades, I'll switch over to my cash account. Now, there's one thing that I want to warn you about before you go ahead and open both accounts and start trading in both of them, and that's spreading yourself too thin when trading options. Buying calls and buying puts, having open positions in the cash account, while simultaneously selling spreads in the margin account can really spread yourself thin, and you can lose focus on one or the other position, which most of the time ends up in losing money. So feel free to open up both accounts, test different strategies, see what works best for you, but make sure to focus in on one of them and try to really profit off one of those strategies. If you guys enjoyed the video, make sure to go ahead and smash that like button, subscribe to the channel, comment down below if you have any questions about a cash account or a margin account. Make sure to join the 10,000 subscriber giveaway, giving away 2 29-inch LG ultra-wide monitors and a Respawn gaming chair. If you guys want to join the Discord group, it's going to be the first link in the description below. Over 1,200 traders in there talking about everything we covered today on a daily basis and more. A great community, so if you want to join, go ahead and check it out. I hope you guys have a great rest of your weekend. Right now, if you're watching this, I'm in Atlantic City. I'm taping this on a Wednesday and I'm posting it on a Friday. So wish me luck in the casino. Hopefully I win some money on black. Hope you guys have a great rest of your weekend, and I hope to see you in the next video. Peace.